webinar and training that we have today. I'm Christine Callahan. I'm chair of the school's Financial Social Work Initiative. I'm also research faculty at the school. And again, it is just a pleasure to have you here with us today to hear on this important topic. We are just thrilled to be able to have Dr. Tisa Silver-Kennedy with us today to present on the PSLF waiver. As you know, this is just a critically important issue right now for students and graduates, and we are thrilled to be able to have Dr. Silver-Kennedy with us today. She is a founder and director of the Maryland Center for Collegiate Financial Wellness. She's also previously the director of financial education and wellness at UMB. She is a superb trainer, advocate, expert in all things related to collegiate financial wellness and important critical issues that are going on for students and graduates. And so we are just thrilled to be able to hear from Tisa today on this topic. So Tisa, I will hand it over to you. And again, welcome everybody. We are recording this so that those who were not able to join us today can have access to this valuable material. So again, Tisa, take it away. Thank you.
Okay. Thank you, Dr. Callahan, for such an introduction. It's always a pleasure to be with the School of Social Work. And I know we've only got a short time, so I want to dive right into the presentation, which is making the most of the Limited Public Service Loan Forgiveness Waiver, how to access student loan forgiveness. I know that public service loan forgiveness has been around for a while, but there was a recent announcement about debt relief that's more broad that came from the president on August 24th. And since everybody wants to know about the $10,000, I want to talk about that first before we go into public service loan forgiveness, which is a much more targeted relief program. So let's start with the Biden-Harris Student Debt Relief Plan that was announced on August the 24th. This plan offers up to $10,000 worth of cancellation for individuals who meet a few requirements. You have to have federally held student loans. These can be for an undergraduate degree, graduate work, or even Parent Plus loans. And those loans had to be dispersed no later than June 30th of 2022. In addition, there's an income cap. For borrowers who are single or married filing separately, their 2020 or 2021 adjusted gross income had to be under $125,000. For married borrowers or those who file head of household, the income cap rises to $250,000. And again, this is going to be measured by adjusted gross income for either the year 2020 or 2021, whichever one is lowest. So if you have those federally held student loans, and in a moment I'll show you how to determine if your loans are federally held, then you could get relief of up to $10,000. In addition, for borrowers who received a Pell Grant during their undergraduate experience, there's an additional award that could push the overall amount of cancellation to $20,000 for an individual borrower. So a lot of the same standards apply. These are federally held student loans that are from an undergraduate or graduate experience. The ceiling for people who only have Parent Plus loans is $10,000. However, if you are a parent who borrowed loans for a child and you have student loans for yourself, then the cap would be $20,000. So the maximum amount that any borrower will get is $20,000. The Pell Grant, the part about being a Pell Grant recipient is what makes the difference between the ceiling of $10,000 and $20,000 of relief per borrower. The income cap still applies. So if you're single or married filing separately, you had to have earned less than $125,000. And for married or filing as head of household, it would have to be $250,000. So if you have the income cap, if you have federally held student loans and you received a Pell Grant, then the ceiling for you is $20,000 worth of relief. It's important to note that this relief, regardless of the amount, is not going to be a cash disbursement. So no one's getting checks in the mail. This is going to come in the form of cancellation of a portion or all of the borrower's student loan debt. So after borrowers apply and their requests are approved, they will see the overall balance in their account updated to reflect either the $10,000 or the $20,000 worth of relief. Now, so the big question is, how can I tell if my loans are federally held? If your loans have been included in the CARES Act forbearance that began on March 13th of 2020, then your loans are federally held. But if you'd like to verify that your loans are federally held, you can log into STUDENTAID.GOV. And once you're on the My Aid dashboard, you want to look at your servicer details. If your loan is held by the Department of Education, you'll see the name of the servicer, but it will be preceded by Department of Education. That lets you know that the Department of Education owns your loans. If you do not see Department of Education in front of the servicer name for your loan, then that means your loan is not federally held. It falls into a category which is called commercially held. It's a strange space because it's still a federal student loan, but it's held by a private bank because of the way that student loans were originated years ago. And there was a note about relief for people with commercially held federal student loans, that they could consolidate into the direct loan program to gain access to this cancellation benefit. Unfortunately, that rule changed just yesterday. So for people who consolidated their loans before yesterday and they had commercially held federal student loans, those loans would be able to access this broad relief plan. However, if the borrower had not consolidated by yesterday, they would no longer be able to consolidate in order to gain access to this particular form of relief. I want to be very clear in saying that this relief has nothing to do with public service loan forgiveness. So there will be an opportunity for people who have those older types of loans that have been previously ineligible for public service loan forgiveness to use consolidation as their way in. So this Biden-Harris student debt relief plan with the $10,000 or $20,000 worth of relief and public service loan forgiveness are unrelated. They're both potential options for relief, but what happens with one doesn't carry over to the other. So many of us, I'm not going to personally, but many people will benefit from both of these programs. The relief that you'll see through this Biden-Harris plan, if you apply early, that relief should come faster than relief that would come through public service loan forgiveness. Okay, so that covers the broad relief. The application for relief is not available yet. It's supposed to become available in early October. It's also supposed to be a simple application, and the application will remain available until December 31st of 2023. So there's more information coming out about this plan seemingly every day, but just know that the application will be available until the end of next year. Even though you have somewhat of a lengthy window to apply, I would encourage you all to apply early. A few reasons for that, but mainly we're expected to go back into repayment at the start of next year. What would be nice is if everyone could have their balance updated before we re-enter repayment. So if you fill out the application for relief prior to November 15th of this year, then there's a strong possibility that you could see your relief of up to $10,000 or $20,000 before repayment is set to begin in January of 2023. So as soon as that application is available, I will definitely be sending it out to all of my contacts. If you would like to hear straight from the Department of Education, you can go to STUDENTAID.GOV/debt relief to read more about the announcement and also to register for updates so that you can be notified as soon as the application for relief becomes available. All right, so let's get into public service loan forgiveness, also known as PSLF. PSLF is a federal program that's designed to eliminate the remaining balances for borrowers who have worked for a public service employer and made payments for at least 120 months. And so far, for the state of Maryland, public service loan forgiveness has resulted in more than 5,500 borrowers having more than $372 million canceled tax-free. And that's as of July 31st of 2022. The bulk of that relief has come within the past 10 months through a program that's called the Limited PSLF Waiver. Now, before we get into the details of the waiver, I want to share with you the original program requirements for public service loan forgiveness. The reason these original program requirements are so important is because we're going to go back to these original program rules once the waiver expires after October 31st of this year. So we've got a little more than 1 month for people to get their applications in, to have their applications evaluated with the more relaxed rules that we're seeing as a part of the limited PSLF waiver. So for the original program, there are 5 requirements. The first one is that borrowers have to make 120 qualifying payments. The second requirement is that those payments have to be made on direct loans only. The third requirement is borrowers have to be enrolled in a qualifying repayment plan when all of those payments are made. Fourth, you have to be working for a qualifying employer for the entire 120 months. Fifth and finally, you're expected to remain working for a qualifying employer at the time you apply for PSLF and at the time that your application for PSLF is approved. And there's more fine print for each of those requirements. So I want to walk through each of them with you briefly. For our first requirement of the minimum of 120 monthly payments, the only payments that are considered are those that were made after October 1st of 2007, because that's when PSLF went into effect. The payments are expected to be made on time in full. For a payment to be considered on time, it has to be made within 15 days of the due date. And if you're a person that likes to pay multiple partial payments per month, you can't do that to speed up the process. They're just going to lump those multiple partial payments together and count them as 1 month toward the 120 that you need to achieve PSLF. I'd like to take a moment to dispel one huge myth here. That myth is that the payments must be consecutive. That's not true. The payments do not have to be consecutive. So if you have gaps in employment, that's okay. If you miss a month, that's okay. You just wouldn't receive credit for that particular month. It's true that you will get to PSLF faster if the months are consecutive, but you are not knocked out of eligibility just because the months are not consecutive. Lastly, extra payments do not qualify. So there's no way to pay ahead. We're looking at a minimum commitment of 120 monthly payments, which shakes out to a minimum commitment of 10 years. Good news for those of you that have worked for a qualifying employer throughout the CARES Act forbearance. That CARES Act forbearance went into effect on March 13th of 2020. And since then, most student loan borrowers have not been required to make any payments, and they've also received the benefit of not having interest accrue. If you had qualifying employment during that time, then the months of 0 payments can be used to count toward the 120 that are necessary to achieve PSLF. So right now, I think maybe we're approaching 31 or 32 months, something like that, but all of those months can be used to count toward public service loan forgiveness, provided that you had qualifying employment. So let's move to the second requirement, that is qualifying loans. For public service loan forgiveness to work, the only loans that are eligible are direct loans, and there's several types of direct loans. There's subsidized, unsubsidized, plus loans for graduate students and parents, as well as direct consolidation loans. Parent plus loans receive a different kind of treatment in that they can be made eligible for public service loan forgiveness, but they have to be consolidated first. So for borrowers who only have parent plus loans, if you want to get them on track for PSLF, you would need to consolidate them into a direct consolidation loan and then begin counting your months of payments and qualifying work experience toward the 120 that you need for loan forgiveness. Let's move on to the third requirement, which is qualifying repayment plans. All of the income-driven repayment plans qualify for public service loan forgiveness. In addition, the 10-year standard plan qualifies, and in some rare circumstances, some of the other repayment plans might have a monthly payment that's greater than the payment required by the 10-year standard plan. And in the rare case that that happens, those monthly payments would be considered eligible for PSLF as well. However, the income-driven plans are the ones that are most likely to leave borrowers with a balance to forgive. So if you want to play it safe, one of the income-driven plans is definitely the way to go for you. 10-year standard plan payments qualify, but if you start on the 10-year plan and you make payments for 10 years, you won't have a balance left to forgive at the end of 10 years. But all of those plans qualify for PSLF. And if you're in a position where you have less than 10 years of the qualifying employment and repayment history, but you want to get on track for PSLF, you want to make sure that when payments resume, you're enrolled in one of the repayment plans that's a qualifying plan. That way, your future payments will be counted toward the 120 that you need for PSLF. A quick note to people who have Parent Plus loans only. Unfortunately, only one of the income-driven plans is made available to parents who have Parent Plus loans, and that's the income contingent repayment plan. So for parents, you'd have to consolidate those loans first, enroll in the income contingent repayment plan, and then the clock would start counting with your first payment toward the 120 that you need. All right, the fourth requirement. This is, all of them are important, but this one is the one where everything really starts because it's the Public Service Loan Forgiveness Program. You can't get to the loan forgiveness part unless you have public service employment. So the type of organization you work for matters more than the actual work you do. It's not about your job title or your roles and responsibilities. It's the type of organization that you work for. So if you work for the government, and this could be federal government, state, local, or even tribal agencies, 501c3 tax-exempt nonprofit organizations, or other nonprofit organizations that provide qualifying services to the public, then your organization would be considered a qualifying employer for the purposes of PSLF. There are only some activities that do not count, like partisan political organizations and labor unions. Unfortunately, those, even if they're 501c3 organizations, that type of work could rule the employer out as a qualifying one for the purposes of PSLF. In addition, PSLF requires you to be a direct employee. So if you are a contractor or an employee who receives a 1099, unfortunately, that employment would not be considered as qualifying for the purposes of PSLF. Additionally, PSLF requires full-time employment. For most people, we think of full-time as 40 hours per week or maybe 35 hours per week. But for the purposes of PSLF, the minimum number of hours worked per week on average is 30 hours per week, or your employer's definition of full-time, whichever is greater. Employers do have some latitude with the definition of full-time for this. So if your employer's definition of full-time is 35, but you work 33, your employer could still consider you as a full-time employee for the purposes of PSLF. But 30 hours average, worked on average per week, that's the minimum number of hours that it takes to be considered as a full-time employee for the purposes of PSLF. Also, if you're a part-time employee, but you have 2 part-time jobs or more part-time jobs, and all of the hours you work between those jobs, as long as they're all with qualifying employers, you can combine those hours together to meet that minimum 30-hour threshold. So for people who are adjuncts, maybe you teach a few courses at one college by day and a few at another university by night. If between those two, you can come up with an average of 30 hours worked per week, then your employment could qualify as full-time for the purposes of PSLF. All right, our fifth and final requirement is that the borrowers are expected to remain working for a qualifying employer at the time their PSLF application is submitted and at the time that loan forgiveness is received. So this particular requirement basically made PSLF unavailable to people who had retired or dropped from full-time to part-time status or went from public service careers to careers in a for-profit space. So if you heard about the program too late, the only way you'd be able to get PSLF would be to get another job for a qualifying employer, submit your application, and stay in that role until your application was approved. All right, I don't know about you all, but that was a lot, those 5 requirements. So when you think about all 5 of those requirements working together for 10 years, it's understandable to see how so many people could have been rejected by this program. So under the original rules, 98% of borrowers who applied for PSLF have had their applications rejected. There was another program created to address that high rejection rate. It's called Temporary Expanded PSLF. And unfortunately, that program had a similarly high rejection rate. But then last October, on the 6th, the Biden administration announced what's called the Limited PSLF Waiver. And it's a temporary overhaul of the PSLF program that has relaxed many of the rules. Since that waiver went into effect, we have seen more than 190,000 borrowers have their debts cleared by way of PSLF. this level of cancellation from November to July, if we look at that figure, 190,000 people versus 16,000 people who were able to be approved during a 4-year period, you can tell that the waiver is making a huge difference because these rules have been temporarily relaxed. So I want to focus on the waiver and what makes it different from the original rules of PSLF. So this slide here shows you the rules of what the Department of Education refers to as PSLF Basic. Then in the middle, we have the rules for temporary expanded public service loan forgiveness. And on the far right, we have the rules of the limited waiver. We look at PSLF Basic. Those are the 5 requirements that I went through. 120 monthly payments, only on direct loans, only while enrolled in qualifying repayment plans, while working for a qualifying employer, but remaining with a qualifying employer at the time of application and approval of the PSLF application. In the middle, we have TEPSLF, the temporary expanded version. Only one rule was relaxed, and that was the rule around qualifying repayment plans. Even with that rule relaxed, the program still had a rejection rate in the upper 90th percentile. But now we look at the waiver, we can see that 3 of the requirements have been stricken. 2 requirements remain, and let's talk about those. The first requirement now is that a borrower needs to have 120 periods of repayment. This language is different from 120 monthly payments. So now the Department of Education and their designated servicer are not looking for actual payment history. They're looking at the loan status. So if your loan was in a repayment status, those months can count toward public service loan forgiveness as long as you had qualifying employment during that time. Periods of repayment include periods when your loan was considered in repayment. Some deferments can count prior to 2013, and some forbearances can count as well. But the key difference is the language went from 120 monthly payments, meaning you actually had to make a payment, to 120 periods of repayment. So we're shifting from looking at payments to looking at loan status. The other requirement that remains, of course, is that you have to work for a qualifying employer because this is still the public service loan forgiveness program. Now, the limited waiver has been working, but it's temporary and it's set to expire on October 31st of 2022. So if you would like to take advantage of the waiver, you need to make sure that you submit a PSLF application by October 31st of 2022. If you wait until the next day, your application will be evaluated using the list of rules on the left. And we know how that worked out. So if you have that public service experience in the loans, I encourage you, please get an application in before October 31st of this year. So under the new rules of this program, any prior payment made will count as qualifying payment, regardless of the type of loan, the repayment plan, or whether the payment was made in full, on time, or in some cases, whether the payment was made at all. I mentioned earlier that certain forbearances and deferments may qualify as well. Over the life of a federal student loan, borrowers are not supposed to have more than 36 months total of forbearances. But what we've seen is that servicers have consistently put people into forbearances for longer than 36 months. So the Department of Education is conducting a one-time review to look at everyone's accounts to see if they have more than 36 months of forbearances over the life of a loan, or any individual forbearances that were 12 months or longer consecutively. If you are a person who's had those lengthy forbearances, one that's either 12 consecutive months or greater, or cumulative 36 months over the life of the loan, all of those periods can count toward public service loan forgiveness as long as you had the right kind of employment. So this is a one-time review. It's supposed to happen in October as well. All of these changes will apply to people who have direct loans, those who've consolidated into the direct loan program, and those who go ahead and consolidate by October 31st of 2022. So there's a lot to do by October 31st of 2022. Quick note again about Parent Plus loans. Parent Plus loans on their own are not eligible for any additional relief through the limited PSLF waiver. However, if you have Parent Plus loans that you've borrowed for your child and student loans that you borrowed for yourself, then those loans could be consolidated for you to take advantage of the limited PSLF waiver. And we'll take a look at what consolidation looks like in detail in just a few slides. Excuse me. But first, I wanted to share with you a success story from a borrower in Maryland. This borrower's journey in higher education started in the 1990s. They had what's called a FEL consolidation loan that put all of their older loans together into one. That loan was originated in December of 2001. This person consolidated into the direct loan program for the purposes of achieving PSLF through the limited waiver, and they filed that application to consolidate in November of 2021. So here's a note that they sent during June of this year. It says, at first, they had said I only had 2 qualifying payments. That means 2 out of the 120 that are necessary. I see that now it has been updated to 91 payments qualifying, so I only have 29 more to make. It says I will receive forgiveness in January of 2025. And I'm still believing that it can happen even sooner. I'm so happy. I thought I was going to have to pay for 10 more years. This person, actually, we began talking before the waiver was announced. And I mentioned the possibility of consolidating their loans into the direct loan program and then working for another 10 years and making payments for another 10 years to achieve PSLF. But when the waiver came out, the person finally decided to listen. They consolidated, had everything reviewed, and it turns out they had made more than 150 qualifying payments. And so when everything was said and done, the person had $113,000 canceled through the limited PSLF waiver. And the difference is truly the waiver, because those FELP loans are not qualifying loans for PSLF, but they're given an on-ramp into eligibility through consolidating into the direct loan program. So this is a borrower who began the process in November, and by August received word that their debt had been canceled totally. So let's talk a bit more about how the waiver works and how you can make it work for you. The waiver is time sensitive. It's set to expire on October 31st. And remember, the waiver and public service loan forgiveness in general only looks back to October 1st of 2007. So we basically got 15 years of history that will be examined. So here is the process that I use for pursuing PSLF. It's 4 steps. The first one is to confirm your employer's eligibility. For those of you who are direct employers of the University of Maryland, Baltimore, it is a part of the state government and it's considered a qualifying employer for the purposes of PSLF. If there are other organizations you work for, as long as you have their employer ID number, you can look up their status in the database located at STUDENTAID.GOV/PSLF. So the first step is to confirm your employer's eligibility. The second step is to know your loans. You can also find out your loan types at STUDENTAID.GOV, and we're going to walk through each of these steps in detail. Step 3 is a decision point. For some people who have those older types of loans, they have to consolidate in order for those loans to be considered for PSLF. And they need to consolidate by October 31st of 2022 to be considered under the rules of the limited waiver. The fourth and final step is to certify your employment. There is an application called the PSLF Application, which serves as verification of your employment. You want to make sure that you get that in before October 31st of 2022. So those are the steps, and now we're going to walk through an example and work through those 4 steps for a borrower in theory. So this borrower, Carla, has worked for UMB since 2005. She has balances remaining on FELP loans that enter repayment as early as 2008 and wants to apply for PSLF through the waiver. So we're going to walk through the 4 steps. First is to confirm her employer's eligibility. Second is to view her loan types. Third is to consolidate if necessary. And fourth is to verify employment by completing the PSLF application. So let's take a look at step 1. Step 1 for UMB employees is easy. It's a qualifying employer for PSLF. If you have other employers, you want to make sure that you have their employer ID number available so that you can look them up in the database. So you want to log into your FSA account, and that's at STUDENTAID.GOV. There's a tool called the PSLF Help Tool that you can log into and enter the employer ID number. The search is going to return you one of the following results: eligible, likely ineligible, ineligible, and no results. For UMB, we already know it's going to return eligible, but there's some other organizations where you might enter the EIN and the result is something different. If you see likely ineligible there, it doesn't mean that that's it. What you could do is send in documentation to make the case for why you believe the employer should be eligible. So if your employer is one of those tax exempt organizations that isn't 501c3 but does provide certain services to the public, you might want to try to make the case. You could be the one that makes it shift from likely ineligible to eligible. And that would mean that everyone who comes after you wouldn't have to do all of that work to make the case. So if it says likely ineligible, I would say don't write yourself off. Even if it says ineligible, in some cases, you might be able to argue the case. Same thing for no results. But eligible is the only one that you know for sure you don't have to provide additional documentation because the employer has already been included in the Department of Education's database of eligible employers. So for the person in our example, we know UMB is a qualifying employer. We can move on to the second step. Second step is still within STUDENTAID.GOV. What you need to do is view your loan types. So if you go into the My Aid section and click on View Details, you can scroll down and there'll be a section that's labeled Loan Types. For each loan type, there's a drop-down menu that will show you each individual loan and the dollar balance on those loans. What you're looking for is the word direct. If you see the word direct listed within the loan type, that means that you do not have to consolidate your loans. However, if you do not see the word direct, that means that those particular loans do not qualify for public service loan forgiveness. The way to get them to qualify for public service loan forgiveness would be to consolidate them. So in our example, Carla has FELP loans. FELP loans don't have the word direct in their name, so that means Carla is going to have to consolidate these loans in order for them to get on track for public service loan forgiveness. Right, so after we know our loan types, then we have a decision point. Do you need to consolidate? We've already looked at Carla's loans. They are FELP loans, so she must consolidate in order for them to be considered for public service loan forgiveness. But I want to give a bit more attention to what consolidation means. Consolidation is something that only takes place through STUDENTAID.GOV with the Department of Education. Consolidation is different from refinancing your loans with a private lender. If you refinance your loans with a private lender, you will lose access to all benefits for federal student loan borrowers, including access to the Public Service Loan Forgiveness Program. So you want to make sure that if you're consolidating, you are doing this through STUDENTAID.GOV. Now, when you consolidate, you're taking older loans, they're going to be paid off, and a new loan will be originated for the same amount. If you're a person that only has one FELP loan, you can still consolidate just one loan. That's okay. It's going to be paid off and a new direct consolidation loan will be originated. But consolidation combines one or more existing loans into one new direct consolidation loan. The example that we have here, we're going to assume these are Carla's loans. She has two loans. Both of them are FELP loans. So we know we have to consolidate them to get them on track for PSLF. She's got one FELP loan of $30,000. She's got another FELP loan of $40,000. If she consolidates these two loans, one new loan will be originated for $70,000. The new interest rate on that loan is going to be approximately the weighted average of her existing interest rates. So the interest rate is not going to jump, and there also will not be any interest rate savings. It'll be very close to the weighted average of the individual rates on those existing loans. So once she has the direct consolidation loan, the servicer will go back and look at the repayment history of the loans that went into the consolidation loan. On Carla's loans, one FELP loan has 96 months worth of history. The other one has 140 months of history. Through the limited waiver only, when these two loans are combined, the consolidation loan is going to be given credit for the same number of months attached to the oldest loan in the portfolio. So for Carla, this means that those FELP loans out there that were at 96 months are now going to speed up to 140 months. And since 140 is greater than 120, once Carla files the PSLF application and it's reviewed, her debt is cleared tax-free. So if you have FELP loans, you need to consolidate to get them in the pipeline for PSLF. If you are a person that has direct loans, but you're in a situation like Carla's in that your loans have differing amounts of repayment history, which is a common situation for people who took time off between getting degrees or completing one degree, you could combine those loans through consolidation and get them all onto the same repayment clock. So if you have direct loans, you don't have to consolidate, but you might find it advantageous to do so, depending on the length of repayment history attached to your loans. So in this example, excuse me, I just wanted to give you some tips on if you have to consolidate. If you go through the process, I'm giving you some application tips for the road. The first one is that when you're in the consolidation application, you're going to be asked if you want a grace period. You want to select no, do not delay the processing of your application, because you want to move this forward so that your loan can be included in the limited PSLF waiver. The second thing you want to do is when you're given the choice of selecting a servicer, you want to select MOHELA, because MOHELA is the one servicer that's responsible for the PSLF program. The third thing you'll have to do is choose a repayment plan. You want to make sure that you choose one of the repayment plans that qualifies for PSLF. For some people, your loans might be so old that after your application is reviewed, your debt could be cleared without you having to make another payment. However, there are other people who have less time. So if you have less than 10 years worth of history and you consolidate, that means you have a few more years to go. You want to make sure that all of your future payments are still being counted toward the 120 that you need for PSLF. The last tip is to use the IRS transfer feature to submit your household and income details. As a part of selecting that repayment plan, you're going to be asked to estimate your income as well as the number of people in your household. But after you provide those estimates, you're going to be given the opportunity to pull actual information from the IRS. Take that opportunity to do the transfer. If you do not use the transfer, you're going to have to fill out a paper request for the income-driven repayment plan, and that could take longer to process. So the more you can do online, the better, and everything you need is at STUDENTAID.GOV. So going back to our example, Carla has to consolidate because she has FFELP loans, and we need to get them into the direct loan program for them to qualify for PSLF. So let's move on to the last step. The last step is to certify your employment. And what I would like to see for everyone is an error-free application. In order to make that happen, I'm going to strongly recommend that you use the PSLF Help Tool. The PSLF Help Tool is an online platform that allows you to answer questions and then have the form populated for you. If you don't use the PSLF Help Tool and you opt to fill out the paper application on your own, you are opening up the opportunity to make mistakes. So if you want to submit an error-free application, please use the help tool, because the help tool will make sure that you answer every question that applies to you and you skip the questions that do not apply to you. For UMB, the PSLF application would be very easy. Once you put in the employer ID number, the address, the type of organization, all of that will be populated into the form. You won't have to worry about checking the box, is your employer a government organization or 501c3 nonprofit or other. The help tool will take care of that for you. It will also make sure that you filled in your employment start date and end date or applicable, as well as your employment status and the average number of hours that you work per week. If there are other organizations that you need to take the form to, that's all right. You just want to make sure that you have an accurate employer ID number for them so that you can have their record retrieved from the database when you're using the PSLF help tool. Another common question that I get is, well, what if no one is willing to sign my form? That is a possibility. There is a box on the application that you can check, and you can check that box using the help tool. That box is something that you should use if the organization you work for is now closed, or if there's no one there who is willing to certify your employment. So if you can't get someone, don't worry, still submit the application. Just make sure that in the help tool, you indicate that there's no one that's willing to verify the employment. So please use the help tool, not the paper version. Even if you use the help tool, it's going to generate a paper application for you to download and sign. You have to have this application verified by someone at the organization, unless you check the box that no one is willing to verify it for you. When that person verifies the form, you want to make sure that they're aware that their signature has to be hand drawn. It cannot be typed. If the person chooses to type their name on the application in a fancy font, your application will be rejected. So make sure that even if the signature is a digital one, it's a hand-drawn digital signature. That is a requirement of the application for you as the borrower and for the person from the organization who verifies your employment. So after you get this PSLF application in, the servicer is going to conduct a review of both your loan status history and your employment history. And they're looking for all the months where you had two things happening. That would be the right kind of repayment history and qualifying employment. For each of those months, you will get an update to your qualifying payment count. The number that we're all trying to reach is 120. And when you get your payment count, the qualifying payment count, those the figure there, those are the months that matter toward the 120 that you need. So after you fill out your application, the servicer will go about calculating your qualifying payment count. I will tell you, sometimes it's just not a smooth process. The first count is usually wildly inaccurate, and then we see in a few weeks the count is updated. Sometimes the count is very inaccurate for people who have recently consolidated their loans, because the history that the servicer looks at is attached to the most recent loan. So if you just consolidated, your number might look very low, but stick with it. Another review will come and you will see an updated count, but it could take a few months for that fully updated count to happen. All of that aside, you want to make sure that to get your application reviewed under the rules of the limited waiver, you submit the completed application by October 31st of this year. It is my hope that the waiver gets extended, but as of right now, it's set to expire on October 31st. So you need to get all of your applications in by that deadline. So let's go back to Carla and look at the results. We know Carla's worked for UMB since 2005. So she's got all of the qualifying employment she needs. She has balances on FFELP loans. They went into repayment as early as 2008. She's applying through the waiver. So for Carla, the action steps would be, number one, consolidate the FFELP loans, because FFELP loans do not qualify for PSLF. We've got to get them into the direct loan program so that they can be considered for PSLF. The second action step is to submit the PSLF application by October 31st of 2022. Once Carla's application is reviewed, she's got repayment history going back to 2008. She's got corresponding employment. Her application would be approved. Her debt would be cleared tax-free. The image that you see is before and after. Under the original rules of PSLF, Carla would have 0 qualifying payments. None of the payments she'd made since 2008 would be considered, all because she had the wrong kind of loan. After consolidating into the direct loan program, the waiver made it possible for her past payments to be counted toward public service loan forgiveness. So this is a person who went from having 0 qualifying payments to 120 qualifying payments because of the waiver. A quick but important note I'd like to make is that in the absence of the waiver, a person could still consolidate their FFELP loans and get on track for PSLF, but none of their past payments would count. None of their repayment history prior to that direct loan consolidation could be counted toward PSLF under the original rules of the program. It's only through the waiver that the department is actually taking a look back at the payment history on FFELP loans. FFELP loans do not qualify for PSLF unless they're consolidated, but through this waiver, you can have that FFELP history counted toward the 120 payments you need to achieve PSLF. All right, I want to be mindful of the time. I know we wanted to take a few questions, so I'm gonna breeze through this example just because I want people who have less than 120 months of loan history or work history to see that PSLF through the waiver can work for them as well. So in this example, we have someone who's worked for the federal government for 6 years and has made payments on direct loans under the extended fixed plan for 70 months. We're going to walk through the 4 steps. First is to confirm employer eligibility. U.S. Department of Commerce is federal government, so we can check that box. The second step is to view the loan types. We see that they're direct loans qualify, so they're good too. Step 3, we can ignore because the person has direct loans, they don't need to consolidate. The 4th and final step is to verify their employment completing the PSLF application. So our action steps are as follows. Get the PSLF application in by October 31st. And at that time, also enroll in a qualifying repayment plan so that their next 50 payments can be counted toward PSLF. Third step is that once the PSLF application is reviewed, those 70 past payments that would have been ineligible before because they were on the wrong repayment plan would all count toward PSLF. To stay on track for PSLF, the person would need to make sure that they complete the PSLF application annually. And then once they finally reach the 120th payment, they would send the PSLF application in one more time. And after that review, as long as they made their payments as promised and they kept that qualifying employment, the remainder of the debt could be forgiven tax-free. Okay, so whether you have more than 10 years of history or less, the limited waiver can help you get closer to that magic number of 120, but you've got to submit your applications before October 31st of this year. If you need to stay on track for PSLF, you want to make sure that you maintain that qualifying employment. It's recommended that you complete the PSLF application every 12 months, but it's not required. It just makes life easier. So submit the PSLF application once every 12 months and when you change jobs. And lastly, make sure that you're enrolled in a qualifying repayment plan once repayment resumes so that your future payments can keep on being counted toward the 120 that you need to achieve PSLF. All right, and I can just leave this here for a moment. If there's one slide that you might want to take a screenshot of, it's this one because it shows you the original rules of the program on the left and the rules of the waiver on the right. And just looking at those lists, you can see the various differences. Right. In closing, before we take questions, everything you need is on STUDENTAID.GOV. You can confirm your employer's eligibility, verify your loan types. You can complete the application to consolidate, as well as use the PSLF help tool to populate the PSLF application. In addition, you can visit the Maryland Center for Collegiate Financial Wellness online. We have an online resource page dedicated to PSLF and the limited waiver as part of a campaign called MD TAPS, which stands for Maryland Telepublic Servant. So please do visit us online at mccfw.org/MDTaps. And you can also check out our YouTube channel where we have plenty of content answering questions mostly about PSLF and the limited waiver. Lastly, if you want to know what the experience is like for people who are applying right now, check out Reddit, the PSLF mega thread. You'll find a lot of borrowers who are sharing their timelines, their experiences, and the responses that they're receiving from their servicer. So while I've given you a lot about what it looks like in theory, they're going to tell you what it's looking like right now in practice. And now I know we've got probably about 10 or 11 minutes left. We can dig into the questions.
Okay, great. Thank you so much, Tisa. Wow,
You're
this
welcome.
has just been stupendous.
I know it's a lot of information.
And we do indeed have quite a few questions. We're going to be going through these one by one, but know that we will also work to get these answered if we do run out of time. Okay, so this the first one kind of goes back to the first part of your talk at the very beginning. Would one qualify for the 20,000 if the loans were for graduate school, but I received Pell Grant for my undergraduate degree?
Yes. So I'm sorry, there was someone that needs to mute. Okay, great, perfect. Okay, so they received Pell in undergrad, but their loans are for graduate school. Yes, so there is no, there's no stipulation about how much or how frequently a person received a Pell Grant, or if the Pell Grant was taken out at the same time the person had loans. What the language says is that if you have loans that are undergraduate, graduate, or Parent Plus, you can receive up to $10,000 of cancellation. If you have undergraduate or graduate loans and you received a Pell Grant, then you could receive up to $20,000.
Okay, great. Thank you. You might have answered this one through the course of your talk. This person asks, who at UMB do we send our PSLF ECF forms to?
Okay, so it really depends on the organization. Some organizations have a defined process and there's a representative within human resources that would sign that form. Some offices have decentralized HR. So anyone who can verify your start date, your end date, the status of your employment, whether it's part-time or full-time, and they're authorized to release that information, they can sign the form. So if your immediate manager has access to that information, they could sign the form. If your department has a payroll representative within HR benefits, that person could sign as well. It's really, there's not going to be someone that you see on campus that has a button, that says, I'm the authorized official for PSLF. It's really just someone who has access to information about your employment and has permission to release that on behalf of your organization. So I check with HR first to see if there is a designated person they want you to sign to go to for the signature. But if there isn't a person, just know that you have a few options.
Okay, all right, great. And this person also asked about website where we can sign up for updates on the previous program. We'll make sure that that's in the material that we provide. I applied to see if I qualified at the end of June. I've not heard back from them yet. What should I do? Call or write? Okay.
Oh, I'm sorry. I'd say you could call. The wait times right now, I'm hearing they're about 2 to 3 hours sometimes to get someone on the phone. But this process can take a few months. I would log into the online portal for your loan servicer to see if there's a note that they've received your application and that maybe your payment count is in progress right now. But if you really feel inclined, you want an answer, then I would encourage you to call to get one.
All right, great. Is TISA or another person available for individual hand holding through this process? I've had an issue I'm needing clarity on and has not been resolved. I will pay for someone to help me. And I think we've got some information on this as well, perhaps.
Yes, I can send a link. I have limited availability for one-on-one appointments, and I can send a scheduling link for that.
Okay, all right. Can you apply for the PSLF waiver and Biden forgiveness at the same time?
Yes, you can.
Okay, great. Is full-time employment necessary or also part-time?
So the full-time definition for PSLF is an average working on a minimum of 30 hours per week. So your employer has some flexibility with the definition of full-time. They can basically alter it for the purposes of PSLF. So if you work 32 hours and they don't consider that to be all the way full-time, 32 hours is above the 30 that you need to be considered full-time for PSLF. So they could go ahead and check the full-time box for you because you're above the 30-hour threshold.
Okay. So even if we weren't making payments because of the CARES Act, we can still count all those months towards the 120 needed?
Yes, as long as you had qualifying qualifying employment, excuse me.
Okay, all right, great, thanks. If you have already been on the PSLF plan and are now taking out more loans for the MSW program, how does that work? Do you start the 10 years all over again? Are you on two different timelines for the two separate sets of loans?
Yes, you're on two different timelines. The loans that you had before, if there was a gap between you finishing undergrad and starting the MSW program, then the loans will be on two different clocks. In that case, what will happen is you need to apply for PSLF officially when each of those batches of loans reaches 120. So what I would do is keep on sending in your PSLF application. Once you're out of school, keep on sending in the PSLF application every year as you're working. But what you will see is that your undergraduate loans are on one clock, your graduate school loans are on another clock.
Okay. Do payments made prior to enrolling in a repayment plan qualify towards PSLF?
So under the waiver, as long as you had qualifying employment, if the loans were in a repayment status or certain types of deferments or forbearances, then yes, those months can count.
Okay, great. My service changed from Sallie Mae to Navient. Both had awful practices where all of the payments I made, my loan still ballooned to well above what I had originally borrowed. My loan has since COVID been sent to federal loan and now another servicer through the U.S. Education Department. How can I make sure that all of my payments are counted when I no longer have access to the records at Sallie Mae?
Okay, so if you weren't able to download your payment history directly from the servicer, of course, your bank statements, if you could go back that far, but when you go on to STUDENTAID.GOV, you cannot see actual payments, but you can see the status history of the loan. So you can see when a loan went into repayment, into grace, deferment, all of that. So you can use that list. I would check your bank statements against the status history that you see inside of STUDENTAID.GOV. Unfortunately, A lot gets lost in translation when loans move from one servicer to the next. If you have an issue where the servicer refuses to give you credit or acknowledge payments for periods when you know you made a payment, I would encourage you to reach out to the Maryland Student Loan Ombudsman, and you can find them through the Department of Labor's website for the state of Maryland.
Okay, great, thank you. I think if you work full-time for a qualified employer and part-time for an organization that does not qualify, like a for-profit, does that still count for PSLF?
As long as you still had the full-time employment for the organization that does qualify, then the part-time employment wouldn't matter.
Okay, all right, great. Can you talk about getting money back or refunded for money paid towards loans during the CARES Act?
Sure.
Okay.
So there's a possibility for people who either paid down or paid off their federally held student loans during the CARES Act to get refunds. They can contact their loan servicer and ask them for a refund. And if the payments were made during the CARES Act forbearance and the person's loans were federally held, then they should be able to get a refund. The same should be true for people who have paid off their loans. For people who have commercially held federal student loans, that process is not working. So if they have to be federally held federal student loans, I know that's confusing, but they have to be Department of Education held federal student loans for that refund process to work.
Okay. And can you talk about the Maryland Student Loan Debt Relief Tax Credit in context of this? Basically, if you get that credit, you need to pay that amount towards your loans in a set amount of time, I believe 2 years. However, I received the credit and pandemic forbearance happened, and now loans are likely going to be canceled under this new plan. However, I'm wondering if I pay back the tax credit now while in, I guess, school.
Okay. So if you receive the tax credit and let's say that your window to make a payment was 2 years, then by the end of this, depending on when you receive the tax credit, by the end of this year could be your time to provide documentation to MHEC that you use the tax credit to make student loan payments. MHEC is not giving special consideration for the CARES Act forbearance. So if you got the tax credit, and you're supposed to provide proof within the 2 calendar years that afterward that you made a payment toward your student loan, they're still holding you to that responsibility. So you would need to make your payment and send them proof. There is no way for them to say, well, since student loans were paused, you don't have to make that payment because you were given tax dollars back that are supposed to go towards your student loan payment. So even though the federal government has suspended student loan payments, the state still requires you to make a payment for at least the value of the tax credit that you received so that you can meet the conditions of that student loan debt relief tax credit program.
Okay, thank you. I'm mindful of the time. We'll make sure that you've got the TISA's organization here. We will make sure that we have a lot more questions here that we want to make sure are covered, but we're running out of time. So we will work with TISA and get more information to you on many of these other questions. Again, mindful of time, we are just about out. We thank you so much for, Meg, for putting that into the chat. And again, thank you. Please join us for our next event on November 18th, where we will be talking more broadly about student financial well-being. Again, thank you so much. And Dr. Silver-Canedy, thank you so much again for this fabulous presentation.
My pleasure. Thank you for having me.
Okay, thank you. Farewell, everybody.